Hello, everybody. Welcome to Talk About House. I'm Todd.
I'm Juana.
Today's video is from a viewer request.
Ooh, viewer.
So we do take requests for videos, and we had Joe pop into the comments and said, no one talks about recast.
Mm-hmm.
It recalculates your mortgage payments without changing interest rate or years already paid. So what we're going to do is we've got a bunch of slides. We're going to just go through them and talk about recast mortgages. Okay. So the first bullet point here, it just explains what mortgage recasting is. Mortgage recasting involves making a large lump sum payment toward your mortgage principal, prompting the lender to re-amortize the loan based on the reduced balance. This can lower your monthly payments while keeping the original rate and loan term intact. In fact, you cannot recast your loan if you're just making the normal payment, right?
No. So what they do is that you have to make a big lump sum payment. So I think for most lenders, the minimum is something like $10,000.
Uh-huh.
And then they will take your loan, and let's say that you have, let's say it was a 30-year loan, and let's say you've had this loan for 7 years, so you have 23 years left on the loan. Let's say that you put down $100,000, then that reduces your principal balance. And what they'll do is they'll take that 23 years left of balance, and they will recast that payment based on the current balance and do it over the remaining 23 years. Now, what's important to note is that this is not for government-backed loans. So if you have an FHA, if you have a VA, if you have a USDA, sorry, not for you. But if you have a jumbo, if you have a conventional, if you have other loan products, then this could be for you. Not all lenders do it, so you do have to check with your lender. But we did look up, and according to several AI sources, there are multiple lenders that will recast your loan.
Okay.
Now, wait, two more things?
Go ahead.
Okay, sorry.
You're probably just going to talk about all the slides, so we just don't want you can show them.
Okay, then you go ahead with your slides.
No, you say the two things. Say the two things, and then we'll just end the video.
Okay, two more things. One, the fees are really nominal, so it's less expensive than a refinance.
Yeah.
Okay, so
The
that's
refinance is super expensive.
right.
Yeah.
And then I forgot what the second thing was.
Oh, well. Then you didn't have two things.
I did, but then you made me laugh.
Well, what were the two things you were going to say? If you knew, what would they be?
The second thing was that that your original interest rate will prevail. So it does. So it's not like a refinance where you get a new interest rate. So if you have one of those glorious, 2-3% interest rates on your loan, then you get to keep that interest rate.
Okay, so the key thing, I will put this thing up here, lower monthly payments. By reducing the principal of the loans reamortized, spreading the remaining balance over the original loan term, resulting in smaller monthly payments. Here's an example. Just like you said, you've made some payments for maybe 7 years, and then you inherit some money,
Mm-hmm.
and you decide you want to just pay down your mortgage just to have the whatever. But then the next month when you show up and you have to make your mortgage payment, it's still the same amount.
Right.
It doesn't change. So the whole point of this recasting
Mm-hmm.
is just to get that payment spread out over the entire loan, not just upfront, and then you just still make the payment. So it's a cash flow thing, right?
Right, it is a cash flow thing. So it's helpful maybe if you're going to be renting out the property and you want to have positive cash flow at least not negative cash flow because of your monthly payment versus what you'd be generating in rent. It's helpful if you're just looking for a place to maybe park some cash. It's helpful for doing some sort of rearrangement of your finances regarding your monthly payments and making that more appealing to you. So there are lots of reasons why people would choose to do that. Like I said, to me, the best thing about it is that it's inexpensive and that you get to keep your interest rate.
Of course, like Wanda said, you retain the interest rate because the interest rate and length is all based on this underwriting and a bunch of data that happened. So they can't change that. This is not a refinance. If you have a really high interest rate, like if you got your loan 2 or 3 years ago and you paid 7.5%, you wouldn't really want to recast. Might make sense to wait till it goes to under 5 or something and then just do a refi on it. You probably don't want to do a recast. Recasting is advantageous if your rate is low. Because you don't want to you can't refi if the rate is high, because you're going to refi, you're going to wipe out the other loan, right?
Right.
Also, you do not require credit check, appraisal, or anything like that, because all that was done when you purchased the home.
Right. So this is not a new loan. It's still your existing loan.
Right. And obviously, this would be a good time to do it if you need a cash flow thing. Like, I've talked to a lot of people who have reached out to me and said, like airline pilots, like they get profit sharing every year. They're like, hey, should I just put my profit sharing against the house? And it's like, okay, but what's your loan? Oh, it's 3%. Well, if you do that, your payment's still going to be the same. So you maybe have to do this recast thing, or maybe you do something else with the cash instead of sticking down. But it's not going to make your payment less. Yes, you won't make 23 more years of payments. They'll stop sooner, but you're going to pay more upfront with today's dollars, which is worth more money than, if you have $1,500 a month is all you pay, the $1,500 a month you pay now is not the $1,500 in 30 years. Your last payment's not going to be anything, right?
Right.
Like Juan has said, not all loans qualify. And also, if your loan was sold to a bundled with other products, it may not work. So we're going to do an example to give you like how much this could affect your payments. Okay, so here's the scenario. Your original loan amount was $400,000.
Okay.
I picked in 4% fixed rate. I just picked a number. There's a lot of people that have 4%, so maybe. Okay. And your original loan term was 30 years. And for the scenario, I just said, okay, you're halfway done paying it, and you just inherited some money, $50,000, and you want to put that down on the thing. And then what would that look like? So the original monthly payment for that loan, $400,000, 30 years, 4%, $1,909.66. Okay. Your new monthly payment after recasting be $1,756. So that extra $153.04 is effectively the money you got. You just put it, instead of putting it all up front and cutting off the end of the loan, you're putting it down on all the payments. So you still have 15 years more left to pay, but you just pay $153 less over 15 years. Now, we are not giving you financial advice as to, I don't know if 4% loan, if I would do this if I had $50,000, because I think I could get better than 4% return. Like, what do you think about that? Why don't a lot, like this was probably a big thing 10, 15 years ago, 20 years ago. But why wouldn't this be a big thing today for a lot of people?
So a lot of people have low interest rate loans, and the money is better maybe put to work in other ways. So, like Todd said, maybe you can get a better return on your money, maybe even in a money market. I mean, there are money markets that are paying close to 5%. If you have a 3% loan, then maybe 5% of money market makes more sense for you. Not only that, but that money now is tied up in the home, and it's difficult to get it out. You'd have to actually refinance to get the money back out. So it really takes a special circumstance for that to make sense. Yeah,
this is a true story. I talked to an airline pilot whose wife is like ER nurse, and they make a ton of money. And he said they just bought a house, 30 years, but they're going to pay it off in 5 years. This like $800,000 mortgage, because they make so much money, they're just going to make like triple payments or whatever. They're just going to pay a ton. And I said, what's your interest rate on your loan? And they didn't just buy it; they bought it a couple of years ago. So, but their loan was really low. It was like 3%. I'm like, could you do better? Like, maybe you shouldn't put all your money to extinguish it. He's like, we don't want to have any debt. Like, I understand that's a psychological thing, but if I could borrow money at 3% right now, I would try to borrow $1 trillion, right?
Okay, so you make up a good point. I want to ask you a question.
Ask me a question.
If you could borrow money at 3% right now, would you mortgage your house?
Would I mortgage the house? Maybe.
Maybe. Look, for a lot of us, having a paid off home is a peace of mind that is beyond a financial a financial decision. It's something very emotional. It's something very personal. So I agree with this person who wants to pay off his house, even though it does not necessarily make financial sense.
Yeah,
it really does. It just makes you feel good to sleep at night knowing that this is your home, and whatever happens, you get to keep it.
What do they have to do if they're watching this video and they want to do a recast?
They have to contact their lender. So you have to contact your lender and find out what the rules are for them to recast your loan, and even if that's available with your lender. Like Todd said, if your loan has been sold and bundled, then you may not be able to do that. So even though your loan may be one of the loans that originally could have been recast, maybe it no longer qualifies for that because it's been bundled. So find out what the rules are from your lender. And, Todd gave a shout out to somebody who gave us the idea for the video. So if you have an idea for a video or a question, leave that in the comments. We do read the comments, and obviously we do videos based on your comments. We appreciate you watching. Please subscribe, hit the notification bell, like the video, share the video, leave us your real estate related comments and your suggestions, and we'll see you on the next video. Bye.
Bye.